Welcome to Massive Passive Cash Flow, the podcast that guides professionals to financial prosperity. Join our community and let's start building your wealth. Here's your host, Gary Wilson.
Hello, welcome back to the Massive Passive Cash Flow podcast. This is Gary Wilson, your host, and we're glad to have you back. If you haven't done so, if you could go ahead and please subscribe to the podcast on your favorite channel. It's on 30 different channels, including the big ones, Apple and iTunes and iHeart and all that. And while you're on there, go to the website, globalinvestoragent.com, and connect yourself with one of our investor agents. These are folks we train. They're not your traditional agents. They know how to identify, analyze, and negotiate on and off market deals. They have access to all the data everywhere in the country. It doesn't matter where the property is and who the property and the people. So this is critical for you. So make sure you grab one of those guys. And in any case, in the meantime, we got a great guest today, Brandon Cobb from awesome Nashville, Tennessee, with some great life experience. So first off, Brandon, I want to say thank you for being here. We appreciate you taking your valuable time to share your knowledge and experience with us.
Oh, Gary, I appreciate you having me on. It's an honor.
Yep. If you would mind, let's go ahead and kick things off here. And I know you're in Nashville now, but you've done some traveling. You like the vacation. Kind of give us a little bit of background, and then we can jump into maybe some examples.
Yeah, sure. So my name's Brandon Cobb. I co-own a company called HBG Capital. We invest in real estate. You've probably heard of a ton of companies that do something similar. We're different as we look for opportunities in the market that are designed to be insulated against market volatility. Basically, we want to be in the asset classes that do really well when the economy is in the dumps. And how we do that's very unique. I always encourage people, if they want to learn more, they can go to hbgcapital.net. But before that, I was in medical device sales. So it was my dream job. I always knew when I was in college that I loved, lived, breathed, and eat sales. I had a door-to-door sales job that paid for the college bills during the summer. I'd hop back in, and I always knew that I wanted to do something with medicine. And my uncle was in spine device sales. And I was like, this just seems cool. I always looked up to my uncle. He's just a really, really cool dude. He always seemed to love what he did. And I was like, man, he gets to wear scrubs every day. That's super cool. So finally worked my way into that industry, loved it. And then one Friday I got sat down and fired. Completely unexpected. And when that happened, that was really the moment when I realized that you can be as loyal as you want to a company. You can work as hard as you want. And at the end of the day, they've got to do what's best for them. And it's no hard feelings. And nobody was going to look out for my financial well-being except me. Mm-hmm. And so obviously a blessing in disguise now, but really didn't know what I was doing. Had started, multiple businesses. I don't even think you can call them business. I think I had like a motivational blog and a course on how to help people break into medical device sales, and then real estate. And real estate took off, started flipping houses, started wholesaling houses, was all over the place at the beginning, doing new construction, all this crazy stuff that I shouldn't have been. And then finally, over a span of many, many years, learned to build a team around me, ended up vertically integrating the company. Our focus is on affordable new construction here in Nashville, Tennessee, not to be confused with Section 8 housing or low-income housing. We like to build homes for first-time home buyers. It's the most undersupplied, highest demand real estate product in the country right now. And so that's what we do. We find off-market deals here in Tennessee, and we build them, and then we sell them, and then and us investors profit, and then we go on to the next one.
Yeah, you're in a great area too, by the way. In fact, where you are is one of the best areas for investing. It's just been solid growth for a good generation. It was kind of quiet for a while, and everybody knows Nashville. Mm-hmm. It's literally within an 8-hour drive from at least half a dozen major metropolitan areas. And you can see all these highways going to and through it. And, of course, FedEx is there. It's just music, entertainment, restaurants down on the waterfront. It's a great place, man. But in any case, so let's dig into that a little bit. Both of us have investing backgrounds, but you've done something a little bit unique. I've done some pretty neat projects in the past. Like we created a closed-end mutual fund. It looks like a REIT, but we use some Wall Street guys to do it and raised capital, bought some portfolios and managed them and sold some off. And it was a great experience. But you've got your own capital group, so kind of tell us about that, because I think there's going to be some people wanting to listen in and participate in this.
Yeah. So when we first got started, we had built this acquisition arm that was more direct to seller. So seller facing, it was called the house buying guys. And so we built that up. So we didn't have any problems relying on agents or the MLS. We had our own sales team, and that was working great. But then we had a lot of problem with contractors and hiring builders. And we're like, God, we were doing 40 plus transactions a year, flipping these houses, doing occasional onesie twosie, new construction at the time. We're like, we can't do this. There's just too much risk. So we built out the construction arm, hired people. Let's see. Did I freeze up here?
Oh,
can you hear me okay?
Yeah, I can hear you. Yep. Sorry. Yep.
Oh, well, my video froze up.
That's okay. Audio is good. We can keep rocking and rolling,
Okay. All right. Sorry about that. Yeah.
That's okay. Hey, this is a little technology. This is easy.
Let's see. You want me to start over with the question?
No, that's okay. You were trucking right along about the dealing with the contractors and what a challenge that was. And the funny thing is I think all of us have experienced that. It's like one of those things we don't really talk about a lot. And I'm not knocking contractors. I mean, we need them, and they provide a valuable service. But for some reason, it's just one of the most challenging parts of this whole business we're in.
Yes, it really is. There's a lot of struggles with managing contractors. And so we saw a big issue with being able to take on more assets in our portfolio and then being reliant on other people to manage those assets. And that's one of the biggest mistakes I think a lot of passive investors make is they do a lot of research on the sponsor, but they don't do a ton of research on the operator. So we built out a whole construction team. We manage everything in-house. And everything was rocking and rolling. We were doing a lot of new construction projects, but like everybody, at some point in time, if you get into real estate, you run out of your own money. So we're very limited on how we could scale. And with real estate, with these new builds, you can't get your money 8-9 months out. And so you got to take those profits, you got to reinvest it back in the company. So it's very slow to grow. And so that's how the need for HBG Capital manifested was we're like, man, we've been doing this so long with our own money. Growth is slow. Let's bring on some investors. And so that's what we did. So we built out the HBG Capital arm, which works with private investors who want to invest in single family affordable new construction, targeting first time home buyers here in Middle Tennessee with a company that can manage it from start to finish. And so that's how that need arose. And man, when we started that, things just took off because now we could keep our money on the side, our powder, and we could really start to make the right hires to really grow things. And the investors are really happy with the returns. A little different than the commercial world where your money's not held up for 4 or 5 years. It was a situation where, people were getting their money back in, 12, 14 months, and they were really, really happy. They could then decide, what else they wanted to do for it. So at that point, when we had that partnership with our investors, that's when things really took off.
Mm-hmm. Yeah. Well, I tell you what, let me ask you this. So you're doing this in and around Nashville. For people who are living in other parts of the country, a lot of them are probably thinking now, well, I'm going to call Brandon because I'm going to invest out in Nashville plus I just mentioned Nashville is one of the coolest places you could be, so that probably helps too. It is true, but what if they're in other states, Georgia and Texas and Utah and Louisiana? Can they do this where they are too, or can you help them in that regard, or what's the what I'm getting at is what other areas would make sense to do this? And are you able to participate in those areas too, or can you simply guide those folks who are living in like Virginia? They want to do the same thing you're doing, but they're not in Nashville. Let's talk about from two angles, from your angle and then from the consumer's angle, because we're all over. We got listeners literally in 50 countries, So
Yeah, great question. So if somebody wanted to do what we're doing, and here's our strategy, and this will kind of help them decide on which market they need to go after. There's a few reasons why we like and selected Middle Tennessee. One is the affordability compared to the rest of the country. Again, I'd said that our investment thesis is we want to be in the opportunities that are insulated against market volatility. In other words, like, hey, what's going to perform well, or at least be insulated when the economy's in the dumps, and people are going to always pivot towards more expensive living arrangements to more affordable living arrangements when the economy turns, because they don't have as much money, they get laid off, whatever, but they want to stay out of the D and C, the D and F areas, right? They don't want to get shot. So that's why we see a lot of opportunity in Middle Tennessee. Is it's still relatively affordable. Last year, the median home sale price in Nashville was $383,000. And it's even more affordable in a lot of the tertiary markets that are only within a half hour away.
Yeah.
So that's one reason why we like it. The other reason is there is no state income taxes, which is attracting a ton of businesses from higher tax states like California, New York. Their businesses are moving here in droves. So that's another layer of insulation it has. Yeah. The next is the local municipalities are very developer friendly. So they're giving tax incentives to some of the bigger companies to move here, which is bringing a lot of jobs, which again gives you insulation if the economy does turn. And especially these tertiary markets where a lot of people are moving from the Davidson County area to these tertiary markets because they can no longer, afford to live in Nashville. Still affordable to states like California and New York, where real estate prices are just crazy. But a lot of those locals who are used to those more affordable houses are moving out there. What's causing a boom in all these tertiary markets, and all the local the mayors and everyone wants development there. So we're able to go in and walk out with a permit sometime within like a week. Wow. In some of these tertiary markets, which is huge. I was talking with someone in California, and they told me it was 2 years sometimes to get something permitted. I'm like, what do you do? Like, does the seller let you just do a 2-year due diligence period before you buy it? And they go, oh, no, we have to buy it and then take the chance of getting permitted. And I was like, that's insane. We don't buy anything until we have a permit in hand with the city, and we know we're ready to rock and roll, because there's so many things that can go wrong and kill the deal. Yeah. So another reason is COVID. Tennessee and Florida are known for not locking everything down. They were still very business friendly. There's not a whole ton of government regulation. I mean, that's huge for businesses. Another reason, I'm kind of a broken record with the businesses moving here thing, but it's a true concept. And so we selected Middle Tennessee because of the affordability. It's very friendly to developers and builders. The no income taxes, these all make it a great place to select. So if somebody's going to do this in a different market, at least consider those variables, right? What's going to happen when the market does contract? Are people going to flow to this city, or are people going to flow away from it? And what advantages do you have long-term by setting up your business there? Yeah.
Well, what's interesting is that I've been to Nashville quite a bit. In fact, I'll be back there in a few months, but I did teach in other areas, like you said, within an hour ring of Nashville. There was, to the north, there was Clarksville. To the southeast was Murfreesboro. New south, I think it was Springfield, and then northeast was like Mount Juliet, and then further to the east. What's interesting is towns that we used to only hear of in movies and TV shows like Gatlinburg and those places like that. Now they're booming. Crazy. So trying to think what the other big town out there is near Gatlinburg.
Pigeon Forge.
Pigeon Forge. There you go. I mean, you only heard of that town in a song. Now the people are moving there in droves, and the building's going crazy. And my family on the mother's side is from Northeast Tennessee, really Eastern Tennessee, Knoxville, Johnson City, Oneida, down towards Chattanooga, and there's little towns called like Ottawa and Umpqua and Ottawa. Yep. And people never heard of them before, but they're right on that 75 corridor, and it's just going crazy, So it is a great state. And then, of course, off to the far west, you've got Memphis, and Memphis has been for a long time one of the best investing areas in the country, as far as affordability goes. So, okay. So the cool thing is there's lots of opportunity. It sounds like still in Tennessee, and I do like the tertiary cities and towns. They don't get a lot of national attention. They're very usually business friendly, growth oriented. And there's lots of wide open spaces, and you're in Tennessee, it's a very temperate state. I know you get a little bit of snow every now and then, but very, very little. And for the most part, it's warmer than most of the population up in New York and the whole Rust Belt. I mean, they're, unfortunately for them, people and money are leaving those states, and Tennessee's attracting a lot of it. Okay. So let's dig into, if we can, let's see, we're probably doing pretty good on time here. As far as how you actually attract the money, like what's when you're raising capital, maybe we can talk about a project, something and maybe a development you did, how you went about raising the capital, then how you went about actually, buying the properties or the land to build on. Is there one that comes to mind? We might need a couple of examples here to kind of get the full vision out. But where does it all start? I guess, does it start with the raising of capital and then you go from there? Or?
We'll be right back with the Massive Passive Cash Flow podcast after I invite you to Monday Night Live. Every Monday night, 7 p.m. Eastern, I teach a class without fail for you on subjects ranging from flipping to buying rentals, managing rentals, wholesaling, commercial, creative purchasing techniques, analyzing properties, identifying properties, hundreds and hundreds and hundreds of subjects. And if you are a licensee, if you have a real estate license, you should definitely tap in, because there are a lot of investor agents also in the class. Many of them are on the global investor agent team. So you can learn from them, as well as from me, how to actually work with investors correctly and profitably. All right, we'll see you Monday night. The link is in the show notes. Go ahead and register. We'll get right to the Massive Passive Cash Flow podcast.
Yeah. So deep rabbit hole. Let's look at it like a funnel, right? Because that's kind of what it is, right? So you got the top down where it's, hey, we're dating, all the way down to, hey, we're doing this. It's kind of like a marriage at that point. So there's a lot of steps in and there between. But so starting from the top of the funnel, it's really think about raising capital like you would if you're on a vacation and you're deciding what hotel to go use or what restaurant you want to go to. You got to think about, what are you going to do? Well, the first thing I'm going to do is I'm going to hop on my phone. I'm going to see what's available in the area. I'm going to look and see what I want. If I'm in the mood for Mexican and that's what I want, I'm going to go look for some Mexican food. And then I'm probably going to hop on Yelp, Google reviews, and I'm going to look at all the different reviews. And I'm going to look and I'm going to make sure that I'm going to have a good experience while I'm there. Then I'm probably going to go to the website and I'm probably going to look at some food. I'm going to see if they're legit. They've actually got a website. They've got everything set up. And then I'm probably going to call them. Do they answer the phone? Do they not answer the phone? It's an indication what kind of service I'm going to get. So the whole idea when we were constructing our process around our customer experience roadmap or investor experience roadmap is like, how do we give them the best experience? So from the top, the person who's going to get the business, no matter what industry it's in, is who can provide the most value to that customer up front before they decide to give them their money. And so, what we do is I do a lot of speaking arrangements. People find us on social media. We try to put out content every single day on all our different platforms with the idea of adding value to our target avatar. So, we love to work with busy business owners who want to make passive income that don't necessarily have the time to go out and jump into real estate, right? Or they're looking to learn and get into it and want to partner with someone with the experience. So once you build out your target avatar and you know who you like to work with or who you best serve, now you can figure out what are the needs of that avatar and start putting out content that's geared towards helping those people. That's why a lot of our drip campaign content is centered around busy business owners, right? We put a lot of content out around helping people grow their business. So it starts from the top. We do a lot of social media. I do a lot of speaking engagements, and we've cultivated a list of about 5,500 people that have signed up over, I don't even know how many years, that just, they get content on a weekly basis. And when the timing's right, they reach out to us. Okay. So what does that look like? Usually they'll go to our website. We have a ton of free content. We have a book, Recession Resistant Passive Income. They download it, provides a ton of value. We've got another ebook, 100 questions passive investors should be asking before investing. And so the whole goal is how do we educate these people? How do we take somebody who's completely green to real estate and make them an expert before they spend any dollar whatsoever? Mm-hmm. So after that, they'll get a drip campaign of emails. It's just 7 emails after they sign up for the ebook. We don't spam you or anything like that. You can decide to opt out anytime. But those 7 emails are really designed to hit on what we've found to be the hottest topics that we've released. So how to use your retirement accounts to invest in real estate, how to use depreciation to pay less in taxes, testimonials, in different investment strategies, kind of the big, easy to understand topics. And then after that, they can set up a call with us. And so they set up a call, and really all the call is us just trying to understand and get to know them better. So it's all about them. We're not pitching anything. There's no hard sales pitch. I hate that crap. So it's just understanding them. So what we do is we build their profiles out. And once we get an understanding of their risk tolerance, the amount of capital they're looking to invest, and what they're looking for, what their strategy is, what's going to best serve them, then when we get an opportunity, down the road, we'll call them and we'll say, hey, we've got something that might interest you. So at that point, we've always got a pipeline of deals that we're cultivating. Not every deal's the right fit for everybody. We've got different products for different people, but we're looking to match the right opportunity with the right investor profile. And so when we send these out, we've got a whole pro forma packet. I mean, everything you'd need to know about this project, the numbers, the budgets. And what I like about what we do is, because I'm invested in other people's deals, I love to invest in other people's deals just to kind of see what their process looks like with their passive investors. And what I love is they put these numbers on here, like, hey, here's the budget. We're going to spend $2 million on this project. And that's great. And they have some little itemizations around the construction and the land or whatever have you, but there's no like detailed budget down to the 2x4 or how much you're going to spend on nails. All that comes with our packet. We try to be as detailed and transparent as possible and really show them the vision of the project before it starts. So they've got comps so we can prove the value of the project and what it's going to sell for. We've got the construction costs built in down to the penny, down to the exact materials. And we've got the entire game plan, the whole Gantt chart built out so they can actually see what trade is executing at what point. So in a way, they can actually hold us accountable. They have got all the tools they need to say, hey, if this project isn't going right, Brandon, you've showed me exactly how it's supposed to go. I can call you out on it if it's not. And so that's fun to me. I really enjoy that. It's almost like acting or operating like a publicly traded company. Like we try to just be as transparent as possible throughout the whole process. And they get updates every 3 weeks with videos and breakdowns. Our project managers walk through the project, give them like a little tour. So that way they don't have to be, boots on the ground here to like look at their investment. So we try to make it fun. People like to invest in fun things. And that's what we really strive to do here.
Yeah. Well, I tell you what, I really appreciate that description. I think that helps a lot because a lot of people never really understand, all that goes on before the rubber hits the road. You know what I mean? There's a whole, like people, you've probably heard the old analogy of when it comes to success, but let's just keep it to business, success in business. What the public sees is that if it's an iceberg, they see the tip of the iceberg above the water, but the reality is 90% of the iceberg is below the water,
Yeah. No, that's a great analogy. It's huge. It's how much value can you deliver to your target avatar? If somebody wanted to go out and start raising money tomorrow, they might not have a target avatar. It takes a little while to figure that out. And that's fine. If you're starting out, start with your friends and family, right? Touch base with them. If you get an opportunity, now's the time to start reaching out. But think about what their needs and wants are. Make a list, write it down. Okay, busy, for example, busy business professional needs to make passive income and reduce their taxable liability. That's a big thing. How do we reduce their taxable liabilities so they don't pay as much in taxes? I'd be more inclined to deliver to them like a Class B, Class C value add multifamily deal where they get a big portion of the depreciation, right? So that's what it's about. Like, how can you hit all of the pain points of your target avatar when you're building out this material? And once you have the deal ready, then it's time to start reaching out and explaining the benefits, how the benefits of your product is going to satisfy the needs of that particular potential customer.
Yeah. Hey, well, let me ask you this: we're getting into some good details here. I've been part of syndications before and capital raises, and we did one where it was kind of a mixture. I mean, the bigger participants, the people putting in 100,000 or more, they were more. Participating more they were equity partners and profit share and not so much a flat 10% interest on their money. And then there were the people that only put in 10 grand, they were simply getting 10% on their money. And when we sold some of the portfolios or parts of portfolios, we would pay off those bottom end investors, the ones that were just 10,000, we'd pay them off, keep the top ones, and then when we sold properties later, that they would get a share of the profit. And some of them were, but do you have a mixture like that too? Like depending on someone's needs and wants, and perhaps the nature of the project, do you structure it so sometimes it's more equity partner, and other times it's more like they're just simply like a lender earning 10% or some combination? Or Do you have any examples of that, or what your preference is, or is it really just case specific?
That's a great example. So we've done just about every product type out there. So specific to our commercial. So another branch besides single family new construction that we like to dabble in, and we focus on the Southeast, not just Nashville's Class B and Class C value add multifamily. Different. We're not vertically integrated there. We're more of just a sponsor. We work with operators with at least 10 years of experience and at least 5 different exits, because that's very important that they have the experience. If we're going to invest our investors' money with them, we want to make sure that they've got the experience. But for those types of deals, everyone, what we'll do is we'll set up a fund, and investors will purchase units of that fund. So they receive a K-1 for tax purposes. By the way, I'm not an accountant. Don't hold me to it. Always get your own tax advice. But they'll purchase units of that fund. Okay. And what happens is they're set up in a preferred return position. So the waterfall flows to the bank first when the rents come in, and then it'll flow to the limited partners, which is the investors, and then it'll flow to the general partners. Most of the time, all the passive investors are limited partners. I can't think of a time where we've taken somebody on as a general partner. Okay. Not that we wouldn't do it. There would just have to be a significant amount of capital contribution for us to warrant it. We'd have to, it'd have to be a multiple 7-figure type of situation. So we've never done it, open to it, but most of the time they're set up in a preferred position, whether that's with our fund or that's with a syndication for a land development deal that we're putting together.
Yeah. Awesome. Hey, well, I'll tell you what, I know we're probably getting closer, but would you mind sharing, maybe like your first deal you did, and then maybe jump ahead to the latest one you're working on, like the nature of the project, that kind of thing. But do you have a fond recollection of your very first deal you ever did?
Oh, I do. Everybody should. So I was running around. It was a flip in Shelbyville, Tennessee. So I lived in Bellevue at the time, and I was driving an hour and 10 minutes every single morning for this flip. It was a foreclosure. We saved them from foreclosure. My business partner and I split the cash to buy it. I put in like $50,000. He put in like $50,000. And every single day I was waking up, I was driving an hour and 10 minutes, and I was motivated. I was exciting. This was new world for me. And just to give you a quick little background, I don't know which way to swing a hammer. So doing the construction management thing, I found out later on it was definitely not for me, but I was excited to learn something new. So driving down there every single day, 7-8 trips a day to Lowe's and Home Depot to make sure the contractors had what they need and they were busy, having to follow up on their work. Oh my God. He was supposed to repair a spot on the roof, and he literally just like slipped some shingles like underneath there. Didn't fasten them down or anything. It was the most lipstick job you could ever imagine. I was like, I had to climb up there. I had to follow up on every little thing. And I thought this is part of it. This is how this industry works. And so 6 weeks later, we did end up finishing the flip. Surprisingly, we didn't run into as many problems as we've run into on some other projects. So it went relatively smooth because it was a basic cosmetic rehab. But I learned so much from that first experience: how to manage contractors, how to properly get the project ready so you're not making 7-8 trips a day to Lowe's. So that one definitely stands out to me. And it was a big moment for us because I think we made around $30,000 on that first one. And we literally just took the money and just dumped it all into marketing. And that's how we really got our business started. Some deals that we're working on today. So going from a single family flip in Shelbyville, Tennessee, we're working on a 46 townhome development in White Bluff. We've got 10 units and then 36 units all beside each other. Again, very competitively priced. We love the area. We love the absorption rates. We love the price point. Working on another 66 single family home development. And, right now we're currently building 66 homes. So quite the journey. I always encourage people to look back, just take a pause. And whenever you're feeling down or you're feeling unaccomplished or beating yourself up, just stop and sit and look at the journey and where you've come from. Man, it's been a fun ride, and I'm so excited for what the future holds.
I agree 100%. It's, there's lots of scary news if you turn on the TV. The news is they should just instead of live at 6, they should just say live at 6, more bad news.
Yeah.
But
yeah.
The thing is, it's only 1% of all that's going on in our universe. I mean, the 99% of what's happening is all kinds of good stuff going on every single day. Like the projects you just mentioned there, even like socially and personally. Think of all the people that some octogenarian crossing a street crossing, pushing a cart of groceries, and then some guy just happens to see her and stops to help her out, and that stuff never makes the news. Your project with the 66 units never going to make the news. But those things happen every single day. And so what I tell people is, number one is turn off the TV. I don't even have a TV. I don't know one. But I do keep up with like NPR, National Public Radio. You can look at C-SPAN. You can actually Google and get the congressional record of every single hearing that occurs every single day in the House of Congress and see really what's happening. The truth, not the spinning it left or right. It's the actual truth, and you can make your own judgments. And you realize, the world's actually a pretty darn good place, man. Things are going pretty good. And that's not being Pollyannish, that's being realistic. So I just choose to participate in all the positive things. I'm not saying the negative things aren't happening, they certainly are, but I don't want to give them any more energy than they've already got, So in any case, any final words of wisdom, or how can people, if they want to get a hold of you, maybe participate in one of your projects, what's the best thing they can do,
Yeah, you can go to our website, hbgcapital.net. That's Harry, Bob, Gary, capital.net. Get our free ebook, Recession Resistant Passive Income, kind of explains our strategy and what we do. Jump on the website, grab our educational resources. We got some quick videos. We got another book, 100 questions passive investors should be asking before investing. It's all free. Again, it's designed to educate you. If you want to hop on a call with us, again, our website, you've got a free, I think it's a Calendly link. They can just automatically go in and schedule it. Or if you want to send us an email, info@hbgcapital.net.
Okay. So it's the website's hbgcapital.net, and the email is info@hbgcapital.net. And then I'm looking here, so I see the one book, Real Estate Investing Tips and Strategies. And the upper left-hand corner says REI Mastermind Network. So is that part of the REI group? Is that are you guys members of that, or there's actually a group called REI? So
let's see. What are you on hbgcapital.net right now? Which resource are you on?
I'm actually looking at the one sheet. Yeah, it's like the.
Oh yeah, so that was another podcast that we went on, the REI Mastermind.
Oh, awesome. Okay. Okay, I see those. These are the ones you've been on, right? Reality, Realty 411, 7-figure flipping. Awesome. Okay.
Yeah.
All right. Well, I'll tell you what, guys. Let's go. Make sure you go to the website, right? hgpcapital.net. Schedule a call with Brandon, and then and while you're out there, also always remember, please visit the globalinvestoragent.com website. And remember, these are agents they're not typical agents. Most of them are investors themselves, and they know what they're doing. And our production rate, I don't like to compare our agents with other brokerages because we're not really a brokerage. We're a team. We're a national team, and we actually outperform the National Association of Realtors average by a factor of 2 to 1. And it's large part because we are investors and we work with investors. And these guys know what they're doing. So in any case, and by the way, when you're out there online, please be kind. Leave a review for Brandon Cobb's interview here on our podcast. That's the currency of podcasts, guys. You fortunately, you get it for free, but there's a lot of work behind the scenes that goes, that's the 90% you don't see is what happens behind the scenes. And but we're glad to do it because it provides a valuable public service. And our only request is please leave a review because that's our currency. That's the currency of podcast is your review. If you could do that, Brandon would appreciate it. I'd appreciate it. And we'll see you on the next podcast, by the way. We thank you for your participation. Thank you again, Brandon Cobb. You guys take care of yourselves, and God bless.
Thanks for listening to this episode of Massive Passive Cash Flow. Be sure to go to realestatewithgarywilson.com to join our community and start building wealth today.